All right, so for today's deep dive, we're getting into the pretty rarefied air of prime residential markets. So this isn't your average housing outlook. We're talking high-value properties, prime central London PCL, and also those big country estates and regional hubs.
That's right. And our mission today, really, after going through all this research from late 2024 right through to now, November 2025, is to distill what was really driving things. And I think the big insight is, for a minute, you have to forget the traditional fundamentals.
Right.
In 2025, the UK's high-end market, it wasn't really reacting to interest rates, first and foremost. It was waiting on Westminster and Washington.
Okay, so let's start there, on that global stage.
Yeah.
Because we found something pretty surprising right away.
Yeah.
When you track prime residential performance globally, you expect the usual names at the top, right? London, Paris, maybe Miami.
Sure.
But the data from late 24 and all through this year, it shows Tokyo is leading the pack. So why should London buyer even care that Tokyo is flying high?
Well, it comes down to one thing: policy certainty. Or really the lack of it everywhere else. Tokyo's strength is this vital benchmark. It suggests global wealth is looking for stability first, maybe over traditional prestige. And when you bring that back to the UK, you see stability, or the search for it was the word of the year. Our latest PCL sales index is at 5,050.2,
Right.
and the prime outer London one is at 275.0. But what those big numbers really mean is, well, prices were basically flat for the year, back to 2017 levels.
So it confirms that initial forecast for 2025, that it was going to be a pretty sober year.
A sober year, exactly.
But if stability was the forecast, why did the market feel so, I don't know, jumpy? It seemed to react so violently to these minor political shifts.
It did.
The sources show the budget cycle just dictated everything. The market literally held its breath, going from post-budget limbo straight into caution until November finally gave some short-term relief.
And that political sensitivity is where you see the market get deeply, deeply fractured. Take the whole issue around non-dom status.
Right, that was huge.
That uncertainty, it wasn't a one-time shock. The research shows it just persisted for months, causing these high net worth buyers to just pause on massive transactions.
And this is what's so fascinating, the dual effect you mentioned. Because that exact same uncertainty, the thing stalling sales, it actually boosted the rental market. Why?
It's simple, really. Buyers still need somewhere to live.
Of course.
If you're looking at a multi-million-pound decision and you have no idea what the future tax liability will be, the only rational hedge is to rent a top-tier property. You wait it out. So the thing that hurts sales
Fuels the high-value rental boom.
Precisely.
And that fracture, it wasn't just domestic, was it? At this level, you can't really separate London property from what's happening globally.
Not at all.
We saw research from early 2025 noting how the prospect of a Trump presidency was being directly digested by London buyers and sellers.
Right.
It was even intensifying labor's mortgage market headache.
Oh, it was a very real factor.
Yeah.
We're talking about conversations at the negotiation table. When people are investing millions, they are actively pricing in a potential shift in global trade, in capital flows. It's a risk factor.
So on top of all that, you have the interest rate roller coaster.
Exactly. When mortgage costs were rising at the start of the year, it created uncertainty and opportunity in country markets.
But then when rates started to soften this autumn, buyers didn't just flood back in.
No, they didn't. The source noted that sellers move quicker than buyers. Sellers were eager, they were ready to transact. But the buyers, having spent months being so cautious, they were much slower to react.
So looking at all this data, what's the bottom line?
The bottom line is crystal clear. Performance in the prime market is now overwhelmingly driven by these external macro factors.
Budgets, elections.
Budgets, elections, global policy shifts, yes. The market is listening to political mood music more than simple economic fundamentals, and that creates this deeply fractured environment. But, and this is a key, the sheer volume of global wealth means there's always a case for property, even in the middle of all this volatility.
A fascinating insight. It seems policy certainty really is the new commodity in these markets, which, it makes you wonder, where else might political forecasting become the ultimate investment metric? Something for you to think about until our next deep dive.